For years, it felt like the housing market could only go one way, up, just straight up. But that climb, it's hit a wall. We're going to break down what's really happening with this great housing stall, and more importantly, uncover this hidden story of two totally different markets that are popping up. So yeah, this is the big question, isn't it? The one everyone's asking, whether you're a homeowner or just hoping to be one day, is the great housing boom finally actually over? I mean, the headlines are screaming it, but the data, wow, the data tells an even crazier story. Okay, just look at this number, 1.3%. That's the year-over-year price increase for September. To give you some perspective, we've gone from these just jaw-dropping double-digit leaps in price to, well, to a shuffle you can barely even see. The engine of the market has basically slowed to a crawl. And it's not just us saying it. The experts are all pointing to this as a massive, massive shift. Nicholas Godek from S&P Global put it perfectly, calling it a stark contrast to that frenzy we all got so used to. Yeah, those days of double-digit gains, they're pretty much in the rearview mirror for now. But here's the thing. That tiny little national number, that 1.3%, it's really just the tip of the iceberg. It's hiding a much more complicated, almost turbulent story underneath. It's really become a tale of two very different markets. Yeah, because when you just average everything out nationally, you completely miss the drama that's happening on the ground, at the local level. You got some areas that are starting to feel a real chill, while others are, well, they're still feeling the heat. So what is really going on under the surface? And you know what? Economists are actually starting to use a new term to describe what's happening. Dr. Lisa Sturtenvant, she's the chief economist at Bright MLS. She calls it a K-shaped housing market. And honestly, it's a perfect metaphor for what we're seeing right now. So what in the world does that mean, right? A K-shaped market? Well, just picture the letter K. You've got one arm that slopes up and the other arm slopes down. That is exactly what's happening to home prices. While one part of the country is still seeing growth, another part is actually seeing prices go down. They're not just slowing, they're splitting apart, diverging sharply. All right, so let's get into how this whole K-shaped thing is actually playing out in the real world. Because it's not just some random pattern. It's creating this really clear divide between the cities that absolutely boomed during the pandemic and the ones that are proving to be a lot more resilient now. Analysts have a name for this too. They're calling it a geographic rotation. And what that basically means is that the winners and losers of the housing market are literally trading places. The cities and towns that were the absolute hottest markets just a year or two ago, they're now the ones cooling off the fastest. It's a total flip. And this really breaks it all down perfectly. On one side, you have what we're calling the pandemic darlings. Places like Florida, Arizona, Texas. They're now actually seeing prices fall. But on the other side, you've got these traditionally stable metros, mostly in the Northeast and the Midwest, and they are still posting some really solid gains. Okay, but the why behind all this is what's really fascinating. The pandemic darlings, they were fueled by this massive wave of migration and the whole remote work boom. Well, that rocket fuel, it's pretty much run out. Meanwhile, these other stable metros are just chugging along, powered by what experts call urban fundamentals. We're talking strong local job markets, established infrastructure, that kind of thing. So what's the big force behind this whole nationwide stall? What's causing this crazy K-shaped split? Well, it really boils down to two incredibly powerful forces that are just slamming the brakes on the entire market. And here are the two big culprits. First, you've got mortgage rates that are just stubbornly, painfully high, making borrowing money crazy expensive. And second, because prices shot up so much, affordability is at its worst level in decades. I mean, it's a classic 1-2 punch that's knocking out a lot of potential buyers. And just to put this into perspective for you, this is the weakest growth we have seen since way back in early 2023, right when the Fed's aggressive rate hikes first sent this huge shockwave through the system. But, and this is the key difference, back then, the market kind of bounced back. This time, these headwinds feel like they're here to stay for a while. Okay, so what does this all add up to? You've got the slowdown, you've got this K-shaped split, you've got these major economic headwinds. All of it is coming together to create a brand new reality for the U.S. housing market. And this really is the crucial takeaway. According to S&P Global, the market seems to be settling into what they're calling a new equilibrium. So forget those wild, crazy swings. The new normal looks a lot more like minimal, and I mean minimal price growth on a national level. And for some regions, yeah, outright price declines. And all of this leaves us with one last, really important question to think about. In this new K-shaped market, where everything isn't just rising at once anymore, but is actually splitting in two different directions, does where you live now matter more for your financial future than it ever has before?